Hi there. Well, hopefully you got your taxes filed this week without having to file for an extension.
Yeah.
It's good to be able to put 2017 behind you, because now we can focus on the new 2018 tax laws that came into effect last December. In March, we had a great lunch and learn with a tax attorney, Lisa Riley Payton, with Fraser, Ryan, Goldberg, Arnold Limited Partners. And a lot of good dialogue has come out of that. We've been talking to a lot of you, and you guys have had some good questions. And so we want to take this time to highlight some of the main features of the tax law changes.
Yeah, exactly. And we're not recording our lunch and learns just yet, so we did want to highlight some of the main issues that we thought were important for someone like yourself that'd be interested in the new tax laws. So yeah.
One of the big changes of the tax laws was the income tax brackets brought down a little bit. The highest tax bracket, for example, the 39.6 got lowered to 37% of taxability.
Mm-hmm. Another big issue that Lisa talked about was the standard deduction. So now for married couples, it's $24,000, and for someone that's single, it's $12,000. So Lisa was saying a lot of people used to itemize their deductions to try to get the most money back, and now with such a large standard deduction, they're not going to even have to do that anymore. So yeah, $24,000 for married couples. Mm-hmm.
And then there's a $10,000 limit for being able to do an itemized deduction on states and local income and property taxes.
Yep. Another issue, and it might put a little bit of downward pressure on the luxury home market, is the home mortgage interest is only deductible to the first $750,000 of new debt that was incurred after December 15, 2017. So essentially, a lot of home buyers aren't going to be able to write off as much in their mortgage interest. So again, a little bit of downward pressure is what you might see in the luxury home market, but we're not expecting too much. But that is a change to look out for. Another issue, though, is the home equity line of credits are no longer tax deductible. So that's kind of a big issue that you should be looking out for. No more home equity line of credit interest deducted.
Right, definitely.
Mm-hmm.
And the estate tax exemption, for those of you doing estate planning right now, the good news is that's been doubled. So it's now $22.4 million for couples and $11.2 million for singles.
Yeah, that is good news. Also, for net operating losses, you're only able to take 80% of your taxable income. So that's a little bit different. You used to be able to take more, so now 80% for the taxable income.
Mm-hmm. And then there's also a new pass-through deduction that's equivalent to 20% on qualified trade or business income from all partnerships, corporations, sole proprietorships that's owned by the taxpayer. And so that's really some great news to just be able to take an additional 20% deduction on that income when it comes through to the personal tax return. Mm-hmm. And we're going to dive into that in more detail at our May Lunch and Learn. So we want to encourage you to please mark your calendars for Tuesday, May 22nd at 11:30 a.m. here at our offices at 16th Street and Camelback. We have a CPA, Mark Barone, and he's going to dive into that in detail.
We're also going to get into the significance that the corporate tax rate was cut across the board to 21%. And because of this, we think it's important to see or to revisit the type of ownership structure you have, whether that be a C Corp, S Corp, LLC, per sole proprietorship, or whatever it is. Because of these changes, not one size fits all, so we definitely want to have you take a look and see if there could be a better alternative to own your property.
That's right, and there is no quick, easy answer to which entity is best for you. It really depends on your situation. There's not one size that fits all, certainly, and it really depends on the facts and the circumstances for you, the investor, as well as any other business partners that you have as part of the entity. And so this is really why you should come and join us for our May Lunch and Learn. We're going to be right here in our offices at 16th Street and Camelback, Tuesday, May 22nd. Our CPA, Mark Barone, is going to be with us and being able to dive into these issues in detail and have a good question and answer session. So we look forward to seeing you then. And in the meantime, if you're considering an acquisition or a disposition and we can be of assistance to you, please don't hesitate to reach out to us. We're here to help you. I am Carrick Sears, SVN Desert Commercial Advisors, 480-425-5529.
And I'm Vicente.Cantua, 480-425-5503. Thanks so much.
Thank you.